Good evening. You're watching Capital Market live on Channels Television. This is where we review the trading week for the global and domestic market every Saturday, preparing you for the next trading week at this point. And yes, we're going into the trading week of the trading month. That's a whole new month. That's August here. But first, let's get a check on how the markets that we track, that's in the global space, played out. We see the Pan-European Stock 600 Index ended Friday down about 1.8% in its sharpest daily decline since April as markets reacted to a sweeping new rounds of global tariff hikes announced by the White House, while the European Union and the UK have already negotiated their own trade agreements. The news sent stocks low around the world on global growth concerns. And we see right there the FTSE. That closed Friday 0.70% down. The DAX, 23,425 points, closing with a big 2.66% decline. The biggest then, France, that's the CAC 40, that was down 2.91% at 7,500 points. Let's move on to Asia now. We see Asia Pacific markets. The end of the day are lower also on Friday. Hong Kong's Hang Seng Index, we see that decline there, 1.07%. The Nikkei 225, 0.66%. So it was red on Friday for most of the markets that we track. The Shanghai Composite, 0.37% down at 3,559 points. If we move on now to the U.S., we see it's a similar picture right there in the U.S. The Dow Jones Industrial Average, 1.23% to close. The biggest drop we saw there, that was the tech-heavy NASDAQ, 20,650 points, a big 2.24% drop there. Even though we had reports there from the Mag 7 in the week, some were good, some not so good. The S&P 500 down 1.60%. So we see that was also the steepest drop since June. That's for the indexes we track there. And biggest loss since April, if you're looking at most of the indexes there. And I did mention it was a big week there for U.S. company earnings. We've got a couple of releases there from the Mag 7, but we'll dig deeper into Meta and Apple today. Meta Platforms, that's Meta Platforms Inc., delivered a strong second quarter performance in 2025 with revenue surging 22% year over year. And we see, that's it, 22% at $47 billion. Costs and expenses, that also rose about 12%. And operating income there, that's for Meta Platforms, 38% up there. So slower pace, when we're looking at some of those rises there. Then we see the next one, another big one, that's Apple. Apple, the fiscal outlook there for the second quarter. We see revenue that rose 5% there, $95.36 billion. Net income, that was up 8%. And we see iPhone revenue up 2%, $46.84 billion. For those that are still debating there who has the strongest phone there, is it Samsung or Apple? We see their iPhone revenue there up, and the Mac revenue, that's for the laptops, that was up a bigger 7%, $7.95 billion. And also top this week in the U.S., we got the Fed decision. The Federal Open Market Committee, led by Fed Chair Jerome Powell, opted on July 30th to maintain the federal funds rate at 4.25 to 4.50%, marking the fifth straight meeting with no change to borrowing costs. The 9-2 vote went against two governors who favored a 25 basis point cut amid mounting evidence of a slowing labor market, with inflation lingering above the 2% target and economic headwinds mounting, as sharpened by new tariffs. The Fed reiterated caution, emphasizing that future adjustments will hinge on incoming data and evolving risks to employment and price stability. All right, let's flip over now to Nigeria. We see the Nigerian exchange closed the week strong, with the all-share index climbing 5.07% to 141,000 points, about 263 more. Market cap there, 89.37 trillion. And we see the market activity was upbeat as volume rose to about 4.84 billion shares, more than what we had the previous week. Value traded, that hit 149.7 billion naira across 174,000 deals. And the sectoral performance now, I was led by industrial goods there, a big jump, 10.12%. And we see followed by banking, 3.49%, consumer goods, 2.72%. But on the flip side, that's also in the financial services counter there, Insurance, that was down 1.22%. Top gainers, UACED PLC, that rose about 60%. Mercure Industries, 41.52%. We see Custodian Insurance PLC, 27.87%. The top decliners, Abbey Mortgage Bank PLC, that led the drops there for the week, 34%. Down, and we see FTN Cocoa Processors also there. I remember that when this one had a stellar run, at some point in previous years. That's down 20.30%. And we see the top trades. Let's look at the top trades now for the week. We see Financial Services, FCMB Group PLC, Fidelity Bank, and Universal Insurance PLC. Those were the top trades for this week. Then also, top news this week, we see Guarantee Trust Holding Company PLC. They completed the cancellation of its global depository receipts listing on the London Stock Exchange. The company said in a notice filed to the Nigerian Exchange Limited that the shift from GDRs to direct equity listings is to simplify its capital structure, reduce administrative overhead, and improve investor engagement across both markets. According to the financial institution, the change that took effect 8 a.m. on Thursday, July 31st, 2025. You can recall that GTCO had earlier announced its intention to cancel the GDR listing on July 3rd, 2025, citing a shift in focus towards direct listings. And also, looking at the Nigerian economy at this point, the International Monetary Fund upgraded its forecast for Nigeria's economic growth for both 2025 and 2026. The new forecast was announced in its World Economic Outlook July 2025 edition. It upgraded its forecast for Nigeria's economic growth to 3.4% in 2025. The new forecast presents a 0.4 percentage points rise from the 3.0% forecast of the IMF in April this year. All right, to our discussion now, we see Nigeria's stock market has posted strong gains in recent weeks, with several companies delivering stellar performances. Then when you're looking at most of their earnings amid a shifting macroeconomic landscape, as investors, they're digesting corporate performance across key sectors from banking, industrials to consumer goods. Attention is turning to what these numbers signal about the broader economic resilience, policy direction, and market outlook for the second half of 2025. Well, join us to break down these earnings now. What lies ahead for the Nigerian economy? We have Mr. Femi Ekundayo, as a managing consultant at Resort Consult Limited, past president, Chartered Institute of Bankers of Nigeria. He's also the past president, Chartered Institute of Directors of Nigeria. Thank you for sharing your Saturday evening with us, sir. Welcome.
Thank you. Good evening, Lati.
It's great to have you. It's great to have you, sir. Yes, sir.
Thank you very much.
So definitely, we're going to be checking the earnings pulse at this point. We see several listed companies. They've reported strong second quarter results, particularly in industrials and banking. What do these earnings tell us about the health of the corporate sector and, investor confidence in your view?
Very impressive. When you're looking at it within Nigeria and when you look at it on global peer comparison. Because the first thing to establish today is that confidence is being restored into the market. If you look at it on daily basis, the rate that the capital market has gained 22 days in succession, where you have the bull taking the pro for that long, and then on daily basis, you're looking at other international markets. Even everything that Trump is doing today, which appears to be affecting all the international markets, is yet to make its impact. I think it is impressive. Thank you.
All right, so, definitely coming into 2025, there were a lot of forecasts, and also seeing that, President Trump was actually, leading, the polls, and, finally we got his announcement as the president returning again. There was some kind of, concerns, when it comes to the global economy, the Nigerian economy and all of that. But it seems all of these markets have trumped all of those expectations at this point. We're seeing new highs, for most of these asset classes. Is this what you saw coming, coming to 2025?
You have to look at every case on its own merit. Even before Trump, there have been a lot of challenges in the international economy. With the coming of Trump, the situation has been exacerbated. But what gives me joy is looking at IMF upgrading the rating of the Nigerian outlook. Don't forget, as it's a developing economy, we should seize every opportunity to see that we look at it positively. If we do, thank goodness today, we are not in Ukraine, and we are not in Russia, we are not Syria. And if we have an enabling environment, I think we should just look inward and see how we can improve on this. Let me give you a reference. I was looking at the performance of the financial sector first half year on year. The growth rate is impressive. I'm not saying that globally that everything remains stable. Of course, we are yet to pronounce what will happen tomorrow. But it is not the situation. It is what we make out of the situation. That is my own opinion.
All right, so looking at some of these earnings now, bringing it to Nigeria, we did see earnings from financial services, one of the tier one banks, and First Holdco. They did release the result there. The first half of 2025, stellar performance. If we're looking at the revenue there and most of the interest income. Looks good. And, some of the other financial services that have also released at this point, some maybe tier three banks. So, in your opinion, the performances, as usual for the banks, they look good. But if you marry that with, the state of the Nigerian economy, credit to the private sector, are you seeing any mismatch at all?
A lot. I see a lot of mismatch. If you're looking at year 2024 compared with previous year, in fact, let us take the first half year on year. All those Fugas, First Bank, UBA, and whatever, majority of them record over 200% increase. And you can also say so in respect of some other sectors. In fact, in this cement sector, Dangote, Pua, they announced and they were almost flaunting it, 400% increase. So the mismatch I see there is this: can we appeal to the banks to also allow the stakeholders to have a share? Because there are two parties here. We have the shareholders. We also have the stakeholders. And I always like people to understand the shareholders own the company and they get all the dividend. But the stakeholders enable what the shareholders bring in to transform into revenue and ultimately into profit. What am I saying here? The shareholders, they go home with their dividend. Do you know that the money employed in a bank, when the shareholders bring in X, what the stakeholders, depositors bring in is more than 2X in all cases? Do you know that among the stakeholders, we also have the employees? Do you even know that a debtor of a bank is a stakeholder, just like a depositor? So when we look at all of this and the charges being made by these banks that are on the increase, I'm not too sure the governor of the central bank has had enough time to look at this. In fairness to him, he's been trying to clear the mess that he met there. But we have to pay attention to this. You go to the POS, you go to ATM, you go to interest rate, all these are on the high side. If banks can make this much profit, honestly, let the stakeholders have some benefit by way of reduction in interest rate, by way of reduction in all these charges that we are having.
Right.
I'm sure if we have a great outcry, central bank should listen to our voice.
All right. So quite a serious point. You've been able to touch on there, because I did get a lot of alerts, debits. At the end of the month, that was in July, from my bank. At this point, for different charges. But we're going to drill down on most of these charges, and how this is also impacting financial inclusion that's in Nigeria. We'll take a quick break now. I still have Mr. Ekunda here. We'll continue the conversation right after this break. Do stay with us. Welcome back. Still watching Capital Market live on Channels Television. And we're unpacking, some of the latest earnings from different companies in Nigeria, and helping me navigate this. I'm still with Mr. Femi Ekundayo, a managing consultant at Resort Consult Limited. And before we went on a break, sir, you did mention everyone, that's most of the stakeholders. When it comes to the banks there, somehow we all need to benefit, from what we're seeing. That's from these stellar results we're seeing from most of these banks. And I also spoke to a banker earlier this week, and he did say that if you're looking at policies from the central bank, he did mention the cash reserve ratio at 50%, kind of ties the hands of most of these banks, because for every deposit you make, 50% of that has to go to the central bank. So that's stifling liquidity for them. That's what he said. And also some other charges that banks have to make. That's why he's saying that we need to cut the bank some slack at this point. How do you see that?
Ladi, all those are valid. All those are factored into the financial statements. Before we go to the bottom line, all those are factored into this before we go to the bottom line. And let me say this to you. I commend Mr. Central Bank because today what Nigerians have experienced is a much better position than what we did some 2 years ago. Don't forget in a hurry our situation in 2022, where you had to pay naira to get naira. Also, leave that aside. Regulation has come to stay. But for the reasons that the central bank is doing so much in terms of regulation, you would have seen what would have been the money in circulation. You would have seen the trend of inflation. So we should not use all of this as alibi. What we're saying is this: you have an interest rate 2-digit, that high, for Christ's sake, can't we also have corresponding increase on interest on deposit, on balances? So that is one. On the charges being made, even if you slash this by 50%, I can assure you banks will still make, if they can make over 200%, they are making over 202 to 241% across those major banks. So even if they can slash the charges by 50%, they will still make more than 100%. And I want to say, as a past managing director, I know that banks need profitability just as they need liquidity. If you encourage the customers more, you get more liquidity. Same way, you can even get enhanced profitability if the customers are encouraged. Because at the end of the day, when people complain that the man on the street cannot do this, cannot do that, it's a function of availability of funding and the cost of the funding. So, Ladi, you know probably better than myself, excuses of cash reserve ratio do not hold sway here. They are there to ensure that the banks operate for stability of the system. And I'm telling you that the bottom line reflects that they are still making so much profit after all those factors have been considered. That is my own take.
All right, so, looking at, most of the profit that the banks are making at this point, and I'm seeing that this is a high interest rate environment, with about 27% at this point, and we've had, this MPC, that's the Monetary Policy Committee, they've held rates continuously at this point. What do you think should be the interest rate for a bank customer, seeing what's played out so far? What should we be earning on our savings account, in your opinion?
In my own opinion, I will leave it to the market to determine. Because the market is regulated in terms of how you perform your functions. But the market is also competitive, because today a particular bank might be paying you interest, let us say 10% on a particular deposit. And it has an opportunity on which it can earn 30%, and it needs the cash. It may pay you 18%, especially considering the volume. So I'm not going to be putting my thumb on this, but let the central bank give a cap, for instance, on the charges. Don't charge more than this. That will assuage the position of the customers. And on interest rate, sometimes it is believed that when you cap interest rate, you are not helping growth of the economy. And that's why I was also advised, if you cannot give so much deduction in respect of interest rate, then encourage the depositors by putting in a little more. Let me say this to you. If you look at the capital market today that is holding sway, it is because everybody envisages that interest rate will come down. Mr. Governor already gave indication of this last week. And people are now moving to the capital market because they are seeing the kind of dividend. Two of them declared 400% profit over last year. So, and that is why you have seen the boom make it this way. I think you have to look at them because they complement each other, the money market and the capital market. And I also want to quickly mention, we are not doing well enough with the capital market. It is not the buying and selling of shares that constitutes the capital market alone. When last did we get stories of IPO, initial public offer? How many of these, we are talking of challenges in several industries, agri, we're looking at the medical. Many of these guys have moved out of this country. There are opportunities for these indigenous organizations to take over from them. And the major factor is inadequacy of funds. Why are we not getting capital market operators to encourage these people to come to source money in the market? Because the environment shows that there's a lot of fraud, which we can use to improve the quality. Today, if we go with this trend, at the end of the year, Nigerian capital market might be among the best in terms of growth. Why don't we deploy this into creation of new businesses? This is my thinking.
All right, so I guess even though we see the all-share index there over 30%, I guess still a lot more still needs to be done. Let's have more IPOs at this point to complement this rise that we're seeing with the all-share index.
Okay, what was the situation of growth? We are now about 89 trillion naira.
Yes, 89 trillion.
Yes, okay. Even when you are expecting growth, by 1%, it was going beyond 1%. Largely, what I'm saying is that these are sufficient indicators that people should come into the market with IPO. Because what did we get? What we have presently is a factor of increase in demand over supply. It has not created new wealth. IPO creates new wealth. IPO creates new opportunities. IPO, that is whether it is IPO or capital issue in whatever form, because existing ones can also expand their operations.
Right.
And I'm particular about Medicare. And I think that area needs great attention.
All right. I guess at this point, let's see more pharma listings, that's pharmaceutical listings in Nigeria's capital market. But I guess it's a good place to anchor it. We'll definitely keep the conversation going. Thank you so much for joining us this evening. We've been talking to Mr. Femi Ekundayo. He's a managing consultant, Resort Consulting Limited. He's also the past president, Chartered Institute of Bankers of Nigeria, and the past president, Chartered Institute of Directors of Nigeria. Thank you for coming on today, sir.
Thank you very much for having me.
And with that, we end Capital Market today. Thank you so much for watching. And definitely we hope that you have direction going into the month of August. Where are you stacking money at this point? Thank you for watching. I'm Lade Williams from the team right here at Channels HQ. It's bye for now.